Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at the Reserve Bank's decision to leave the official cash rate on hold at 3%. Now this was widely expected, but everyone wanted to get an idea of what the Reserve Bank's going to do next. When is it going to increase the official cash rate next? Well, from the statement, which is relatively brief, it's clear the Reserve Bank still wants to increase the official cash rate, but it's saying it'll do it at, quote, some stage. Now, most economists are saying the Reserve Bank will start increasing the official cash rate again from March the 10th next year. But how high will it go once they start again, and when will it stop? Well, the bank economists believe that the economy is starting to grow reasonably strongly again, that we've seen a boost from high export prices, and the Christchurch earthquake will help growth in the December, March, June quarters of next year. They see growth heading towards 4%, going on the relatively strong business confidence figures that we've seen in recent months. However, the Reserve Bank is more downbeat about the economic outlook. In its September monetary policy statement, which it says it's sticking with in today's announcement, it sees growth at around 2.5% next year. And here's where we have a divergence. The Reserve Bank sees relatively slow and low increases in the official cash rate over the next couple of years. It's expecting that official cash rate to top out at around about 4.5% by the end of 2012. And what would that mean? With a 4.5% official cash rate, you're looking at floating rates at around about 7.5%. Now, we don't know exactly what fixed rates are going to do, fixed mortgage rates that is, because they depend to a different extent on what's happening in the wholesale markets and what the banks are seeing in terms of their funding costs. But the floating rate is more connected to the official cash rate. So if the Reserve Bank's view is correct, you'll see floating rates by the end of 2012 around about that 7.5% to 8% mark. However, if the economists are right, rather than the Reserve Bank, then the official cash rate would be a little bit higher than that, more like 5% rather than 4.5%, and that would take floating rates over 8%. So this raises the question, should you fix or should you float? Well, obviously at the moment, floating rates for mortgages are around 6.2%. Fixed rates for the 2-year are around 6.7%. So in the short term, it seems to make sense to stay floating. But of course, when you decide to fix or float, you're really making a decision for the next couple of years. And that's where it becomes interesting. What is your view on where interest rates and the economy will go for the next couple of years? The Reserve Bank is saying slow and low growth, which would suggest that a floating rate would be better than a fixed rate. The economists are saying reasonably strong growth and a little bit of a steeper rise in the official cash rate, which would mean that a fixed rate is better. So, and of course, there's the personal situation around fixed versus floating. If you're really keen to be sure about what you're paying out on your mortgage every month, then it would make sense just for your own peace of mind to be fixed rather than floating. So it's a tough personal decision. I'm Bernard Hickey. That was a special economic weather report brought to you in association with the Bank of New Zealand.